Okay, so you know how we love to dig into these market movers.
Oh, yeah. Always exciting to peel back the layers on a company making headlines.
Especially when it's a company like Nano-X Imaging, ticker symbol NNOX, or Mannix for short. You sent over this Motley Fool article.
Yeah.
Really interesting piece on why their stock had a bit of a rough day on March 31st, 2025.
Mm-hmm.
So I figured let's, make this our deep dive for today.
Absolutely love it.
Really unpack what went on, pull out all those important bits of information and try to figure out what it all means.
I'm with you.
Yeah.
Let's break it down. We're talking about this Motley Fool article, Why Nanox Stock Slumped Today, published on March 31st, so right up to the minute.
Yeah.
And, for those of you listening, think of this deep dive as your shortcut to understanding what moved the markets.
Mm-hmm.
We're going to sort through the financials and break down why investors reacted the way they did. You'll walk away with that clear, concise knowledge.
Right.
And hopefully a few aha moments.
Exactly. And for those, who are following along, we're looking at this date, specifically March 31st, 2025, because that's when things got a little interesting for Nanox stock.
A little lumpy, yeah.
It fell almost 5% that day.
Yeah, and that's what caught our eye, right?
Yeah.
Because the S&P 500 actually went up 0.6% on the same day.
Mm.
So that right there tells you something specific to Nanox was probably going on.
Right. It makes you think, okay, what's happening here that's making them stand out?
Exactly, yeah. Some company-specific news must have come out and investors reacted to it.
Yeah.
And the article dives into this, and it all really comes back to their most recent earnings report.
Their fourth quarter results.
Exactly.
Yeah, let's get into that.
Let's do it.
So they reported $3 million in revenue.
Okay.
Now, on the surface, that doesn't sound terrible.
Doesn't sound bad, right?
Especially when you compare it to the $2.4 million they brought in during the same period back in 2023. So at least it seems like they are growing revenue.
Yeah. And you're right to point that out. Revenue growth is typically a positive sign for a company. It means more sales, more demand for their product or service. But clearly that wasn't enough to get investors excited here. Makes you wonder what else was lurking in that report that might have caused some concern.
Right. So here's where things get kind of interesting, or I should say more interesting. While the revenue did go up, their net loss actually got bigger.
Uh-oh.
Yeah. So in the fourth quarter of 2024, they reported a net loss of $14.1 million, which breaks down to a loss of 23 cents per share. And when we look back at the fourth quarter of 2023, their net loss was $10.2 million.
Okay.
So we're seeing this pretty significant increase in how much money they're losing.
So that widening net loss is probably the big red flag that spooked investors.
Yeah.
Even when you're dealing with growth companies,
Yeah.
profitability still matters.
Of course. Yeah.
And a bigger loss.
Yeah.
It can raise questions about how efficiently they're running their business, how much they're spending, or even, if their whole business model is even going to work in the long run.
Right.
Gets people a little nervous.
Yeah, and the article actually mentions that analysts were expecting a slightly smaller loss.
Oh, really?
Yeah, according to the Wall Street Journal, they were predicting a loss of 22 cents per share.
Okay.
So even though it's just a 1 cent difference,
Right.
missing those expectations probably just added to that disappointment for investors.
Yeah, it's like, you're expecting a home run, but the batter just gets a single. Technically, they got on base,
Right.
but it's still a little underwhelming.
Yeah, it's not what you were hoping for.
Exactly. And those analyst expectations, they usually represent kind of a consensus view of how a company is supposed to perform. So when they miss, even by a tiny bit, it can make investors less confident. And sometimes they start selling off their stock
Right.
as they adjust their outlook. And that seems to be what happened here.
Yeah. Now, to be fair to Nanox, they did try to explain this larger loss. They pointed to this one-time income boost of $3 million they had back in the third quarter of 2024. So it sounds like that earlier income bump might be making the year-over-year comparison look a little worse than it really is.
Okay, so they're saying it's not necessarily a sign of things going downhill in their core business.
Right. It's like if you got a big bonus 1 month,
Right.
and then the next month your income looks lower, even though your regular salary stayed the same.
Makes sense, yeah. A little misleading.
Exactly. But still, even with that explanation, the fact remains they had a pretty big net loss, and it was bigger than the year before.
Right, so investors are going to pay attention to that.
Yeah. Okay, so it's not all doom and gloom for Nanox, though.
Okay, good.
The article does highlight some significant positives. Notably, they got FDA clearance in December for their Nanox.ARC system for general use.
Wow. Okay. That's a huge hurdle to clear from a regulatory standpoint.
Yeah, I mean, that's a big deal for any medical device company. It means the FDA has reviewed their technology and given it the green light, saying it's safe and effective.
Right.
And with that clearance, Nanox can actually start selling their Nanox.ARC system in the U.S.
So a major step forward for them.
Absolutely, and it's not just the U.S. In February, they also secured a CE mark for the Nanox.ARC system. And for those listening who are thinking about market potential, this is huge because a CE mark means that they can now sell their product in most European countries.
Wow. So they're opening up a whole new massive market for themselves.
Exactly.
That's impressive.
Getting both the FDA clearance and the CE mark in such a short period of time. I mean, that really shows they're making some serious progress on the regulatory front. These approvals are critical for Nanox to transition from a research and development company to one that's actually, generating substantial sales and revenue from their product.
Absolutely.
Now, let's shift gears a bit and talk about Nanox cash on hand.
Okay. Yeah. Always important.
The article gave us a glimpse into their financial health, and it looks like they're in pretty good shape. They had $83.5 million in cash equivalents, and other pretty liquid assets at the end of last year.
Okay.
And that's actually a bit higher than the $82.8 million they had at the end of 2023. So they seem to be managing their money pretty responsibly, at least when it comes to their liquid assets.
Yeah. And having a healthy cash position is crucial, especially for a company like Nanox that's still pouring a lot of resources into getting their technology to market.
Right.
That financial cushion gives them the flexibility to keep things running, invest in more development, and ramp up manufacturing and sales as they start to commercialize these approved products.
Okay, so let's circle back to that stock performance we were talking about earlier.
Right. Let's bring it home.
We saw that dip of almost 5% on March 31st. And as we said, that was kind of going against the grain of the overall market's positive movement that day. Now, the article also gives us a snapshot of where their stock was trading. So as of late afternoon on March 31st, 2025, Nanox was at $4.99 per share, and their market capitalization was $292 million. And that daily drop was 24 cents per share, or that 4.59% we talked about. Now, for someone who's maybe not as familiar with this stuff, what does market capitalization really tell us about a company?
Yeah, so market cap is essentially the total value of all of a company's outstanding shares of stock.
Okay.
You can kind of think of it as a quick and dirty way to gauge the company's overall worth in the eyes of the stock market.
Okay.
So in Nanox's case, a market cap of $292 million gives you a sense of what investors collectively think the company's worth at that point in time.
That's a good way to put it. So to wrap this all up, what are the big takeaways here?
Well, the main thing to remember is that even though Nanox did see an increase in revenue, the fact that their net loss grew even a little more than analysts were expecting seems to be the main culprit behind that stock drop.
Right.
Basically, the market didn't like those bottom line results.
So even with those big wins on the regulatory side with the FDA and the European CE mark, the immediate financial picture seems to have overshadowed everything else that day in the eyes of investors.
Yeah, it's a good reminder that investors look at both the present and the future when they evaluate a company.
Right.
And investors who put money into growth-oriented companies, they get that losses might happen early on as the company invests heavily in research and development and getting their product out there.
Right.
But they're also looking for signs that the company is on a path to becoming profitable eventually.
Right.
A bigger loss, even with revenue growth, can make people question whether that growth is sustainable or whether the business model will actually work long term. So yeah, the regulatory approvals are great for future revenue, but that bigger loss made people wonder about the path to profitability in the short term.
And, thinking about, our listeners wanting to grasp information quickly, this whole Nanox situation really shows how a company's stock price can be pulled in different directions by all sorts of factors, both good and bad, happening at the same time.
Absolutely. It's not always a simple story. You've got promising things happening on one hand, like those regulatory approvals, and then concerning financial results on the other.
Right.
And in this case, the market clearly signaled which one it cared about more on that particular day.
Exactly. So here's a thought-provoking question for everyone listening. Given all this information, the revenue increase, the bigger net loss, the FDA and CE mark approvals, and their stable cash position, What do you think will ultimately determine Nanox's success moving forward? Will it be proving they can consistently make a profit, or will it be more about how well they can leverage those regulatory wins to get into new markets and maybe worry about profitability later down the line?
It's a great question.
That push and pull between short-term financial performance and long-term growth potential, it's a theme you'll see play out time and time again, not just with this company, but across all sorts of industries, particularly those focused on innovation and new technologies. So something to keep in mind as you continue to follow these developments.
Totally.
And as always, do your own research
Yeah.
before making any investment decisions.
Couldn't agree more.
Excellent. Thanks for joining me on this deep dive.
It was a pleasure as always.
I always learn something new. Until next time.
See?